just looking at the way the equities had sold off, about the similarity to February 2018, that the equities, and granted that was the beginning of the year, but the equities rallied into the end of the month. Granted, it wasn't quite the same. Well, they weren't on their record highs, put it that way. That's the difference. But we then got post-ISM, this sell-off begins in the equities. We then also had payrolls, the equities start to go again. One big feature of that day was that the liquidity, you see how the S&P's gone thin now. We're down, double digits. It never came back for the rest of the day. And that then spurred the enormous sell-off that we got on the Monday. Now, don't in any way construe this to me predicting an absolute monster.
No, because this is an educational stream, as you can see on the screen.
And bearing in mind, we've already done 220 handles from the highs of pre-ISM. So it's a huge move already. But just the feels to me like similarities. It's hard to put a finger on exactly why and exactly what the similarities are, but this feels a little bit of some similarity in it.
Yeah, again, I just think the context. So again, yeah, just to look back, that was your highs here. So I think again we open up and I'm waiting now. Try to calculate what the open is going to be on the cash market, but in the US. But definitely the line that we talked about is very much has been broken, in my opinion. At least we're going to open with a pretty big gap down potentially, and now we're going to get interesting in some obviously very very microstructure. So the idea is to you have your initial reaction on treasuries. Now you have some couple of pullback. I know it's only 10 seconds, but that's such a high volume that you can, in my opinion, rely. Obviously, I won't do that in any other time, but this is a type of indication. Then you can. Let me just check quickly. So that's your Bund. Sorry, that's not US Treasury, but still quite interesting. Try also to see the volume inside the large candle. I think it's always important to keep an eye on that, to see if there was any kind of pre-level that has been level before the data that was in a sense already with more volumes than others. So I'm just quickly going to check now. 250, 260, 250 went back up. So yeah, around the 24, you see this is where we seems to have been trading a bit. We are now at 20s. 20. So start to see some retracement. Yeah, actually, big treasuries also have been trading some reversal, but the gain was definitely taken from being ready for this possible miss number.
We've seen everything sort of pull back a little bit now. I think this is now the interesting moment, or the interesting moments, where we work out, is this the one massive move in the treasuries and we're going to pull back, same with the S&P, or is this now the pullback and then the next wave, the the sort of continuation phase. We have seen quite a bit recently. If you go and look at the payrolls last time, and we saw this I think on CPI as well, where the treasuries are quite happy to move and they go bang and stay there, and that's it, and they don't really do a great deal else. It's the equities that have that little bit more after the fact, and that's what I think you want to be interested in at the moment. How do these markets now react? The S&P's had a pullback. Notably, that pullback in the S&P has also not gone above 90.
Yeah, I'm sorry. I'm dealing with a risk. Yeah, you see, yeah, it's very interesting because obviously, if you have been watching us for a while now, just let me maybe look at the candlesticks. Yeah, the always be interesting in the way the market a pullback, you see, and you remember the 90. And I'm sorry if I repeat you, by the way, because I was just so focused on messages that maybe you already have said that. But
Yeah, I
uh,
did. I just
okay,
suggest the
yeah.
90.
Yeah, so the 90 was an interesting one, and also because you have the added value of the price ladder, because otherwise it's just 90 is the low. But we've seen there was 2,300 lots. We saw it traded, we saw it, and again it become. This is what I call like opportunistic level. I'm not sure. Maybe I'm gonna have to check, but I'm not sure 90s was printed. We've seen a lot of big data, big numbers, big offer, big bids, big icebergs on rounded number. I mean, it's been the theme, I think, for me in 2024 in terms of possibility to see some order flow informations. And again, previous to the data, I would not have said 5390. You don't know if it's going to be like 2,000 lots sitting there. But now, as much as it's an information, we can see that the market is struggling, at least for now, to trade above. And what we can say also is on the first blip, when the market discovered this 2,000 lot, you see we still went back up $6-7. So this is how much sometimes. Again, I would say it's never a trade recommendation, guys. Seriously, it's educational, but this is where some guys can create obviously a strategy. Is the hedge is to be fast. So basically, you see the order, you front run, you wait for an automated blip up, and then you go out, or you, because you have time to put a stop below, and you have slippage, but everything is just like calculated.
We're right on the level now, and we got 3,500 offered.
It's a 91 actually. That's 3,500.
Yeah, that's what I mean. But you're right back there. But in fact, you're seeing the sellings coming in at 88.5. You look, there's no volume above this. That's where they're selling it from. People effectively, they're not waiting to go to 90, and this then brings more traders in, right? Because if you're thinking, oh, I'm going to sell when it goes to 90 and it won't go there, you've now got to make a choice. Are you willing to sell 88.5 and be in, or are you going to wait for 90, watch this fall out of the sky and not be part of it? So it's how much are you willing to pay now to get into this trade if you believe this has got another leg towards the downside? If you don't believe it's got another leg to the downside, then we want to see what's above 90, particularly see what that 3,500 does. But the last time I recentered as we came off the low in the S&P. So all of these, you look at where the 2-year, 5-year, 10-year is, where the bunds are, where gold is. Gold's now a fair bit lower. Most things are actually lower. So you're seeing that then reversal of the initial movements.